Welcome to the Second Bite Podcast, where we talk with top entrepreneurs and CEOs about creating valuable companies through creative transactions. Now, let's get started with the show.
Welcome to the Second Bite Podcast. I'm doing something a little different with this episode because I wanted to capture the emotion and the intensity of the process itself, as opposed to like many of our episodes where it's a few months or in some cases even a year or more post-transaction. So in this episode, there's 4 parts to it. The first 3 parts are with one owner, Jordan, right after they sign an LOI, partially through due diligence, and then right after the deal closed. So you can get his observations about what it was like going through that process. And then Parker, who is Mr. Inside to Jordan's Mr. Outside, talks about the entire experience really just a couple days after we got the transaction closed. So it's a little bit of a different format. I think you're going to like it. Appreciate any comments or feedback that you have. Thanks. Welcome to the Second Bite Podcast. I am your host, Todd Taskey. I have a great guest with me today, Jordan West from Social Commerce Club. Jordan, thrilled that you're here.
Hey, this is great, Todd. Looking forward to having a conversation like this. You know, you and I, we have a lot of, very candid conversations, and I don't think this one will not be a candid conversation. So looking forward to it.
Yeah. And this is for our listeners, this is going to be just a little bit different because you have just signed an LOI as of 3 days ago. And so what I want to do is kind of capture the moment in time, because signing the LOI and thoughts around that tend to get lost as you go through the deal, and then they're covered up by the excitement of post-close and on from there. So to give just a quick intro, you're the founder of Social Commerce Club. Just talk about what Social Commerce Club is, what you do, and who do you do it for?
Yeah, I mean, this is really interesting. Probably not the normal. I mean, I know that this is not the normal deal that you do. So we saw TikTok Shop and social commerce come around about 2 years ago, probably 2.5 years ago now. I saw it as a brand owner and thought, oh my gosh, this is what I'm going all in on. I understand why this is going to be so massive for brands. So through all the ups and downs of TikTok Shop, we happen to be there throughout all of that and stuck with it. And we're now we go back and forth in North America as either the top by GMV or the second back and forth. And so that's what we do. Interesting, actually, as of today, and why I'm freaking out right now, Todd, is that Instagram just launched their version of social commerce today. And so that'll put us in an interesting date and time here, where Adam, the CEO over there, just launched it in a bunch of different markets, and it's really interesting. And so I'm like, my mind is spinning, which is again why we're called Social Commerce Club and not TikTok Shop Club.
Yes.
So, yeah.
Well, I mean, well said. And you do that mostly for large brands, correct? Well-known brands.
That's right. Yeah. So we work more in the sort of $10 million plus, a lot of $100 million, $1 billion companies. A lot of people know about that want to enter social commerce and have not yet. They do not understand the mechanics or the muscles that it takes to actually enter the channel. And so we are their Sherpa into the channel. And we come from the direct to consumer world. And so we understand that, and we understand the demand capture side of Amazon, and we sort of bring it all together in this new form of marketing that is social commerce.
And so question number one that I think a lot of people would ask, there's a ton of tailwind in the space that you're in now. You guys are growing extremely fast. Why look to do a deal? Why do you want to do a deal? What's the intent there?
I mean, it was a really interesting time, right? When we first came to you, and the reason was we had so much inbound. And I think that we needed somebody on our side who understood the place and time where we were, because again, we're not at the size that PE would normally take a look at us, right? We're a little bit different than that right now. And so this is a really interesting space and time where we thought we're going to triple this year, most likely, right? Again, from last year, which is very big. With that does come a lot of headaches, and there's a lot of support that we do not have on our own. And there's a lot of places where, I've been around in business long enough to know that I don't know what I don't know. And so there's certain levels that you get to, and we thought, well, this may be one of those times where we can look at a potential partner right now that can actually help us grow even more than we could on our own in the space and time that we're in right now.
And so you had a bunch of inbound. We knew a couple of folks. And then relatively quickly, you guys had a pretty good sense of the value that you thought the business was worth. And pretty quickly, we narrowed down to a group of 3, which kind of got down to 2 quickly.
Fairly quick without going to market either. Right. Like it was this was just from inbound interest and people that knew the value of this in the space and what this would look like within a greater group as well. That was the interesting thing about all of this.
And it seemed like there's not a lot of folks that are doing TikTok Shop, from an agency perspective. I'm going to say,
or at scale, or
that's the biggest one, right?
In any sort of way that is actually working.
And so when you have larger agencies that have a need for this, there's a need to offer because their clients are banging on the doors. There was not, or is not, or very few pure play TikTok Shop agencies with the level of sophistication I think that you guys bring. And that really drove a lot of the interest from highly qualified buyers all the way down to what I would consider aspirational buyers.
Yeah.
The thing I want to get your insight on. So narrowed down to 2, and then you did face-to-face meetings with those 2. How important is doing that? How impactful was that meeting? And what did you learn from the meetings?
Oh, incredibly impactful. I would not do a deal with somebody who we had not had real FaceTime with in real life. The reason being is there is something about being, this is like the woo-woo part of me, like there's something about being in person with people that you can really get a sense of what they're like. And the really hard part for us is that both parties were incredible. Right. Both parties that we were going after, like being in person, that made it more difficult, to be totally honest. It was a hard decision.
And so to define it a little bit, you had group 1 and then we had group 2. And group 1 was somebody that you had known before and you had developed a relationship with over time and you'd met with over time. And to be fair, when we first kind of got started talking, you felt like, hey, we already got the guys.
Totally. We thought that this was we thought that this was actually a great group. We came from the same area as well, right? Of like direct to consumer. We understood each other and understood the value that we could bring in that organization and how we could work together. And then even looking at Second Bite as well, right? Like we saw the whole path and we're like, awesome. This is great. And I'm sure we'll get into this, but like it was like, okay, well, now does the money work, right? Do the economics actually work here? For what we need to do, because in this situation, we're like, well, do we just keep growing? Right? Like we can keep growing on our own. Like we trust ourselves. So,
and what happened then? So with group 2, which is a private equity has backed group 2, you met with them knowing that you were really fond of group 1. What happened when you guys got together?
Well, I think group 2 really laid their cards on the table in a totally different way and just said like, we need you, we want you, and what do you need to make this happen?
And what was different about how they did it versus the other group?
I think that for them, it was very intentional, right? Like, I think about what I would want.
They talked a lot about why they need you and how you fulfill their bigger vision.
Totally. And there was no games played whatsoever. It was like, hey, we're coming up. They flew 8 or 9 of them up to Vancouver to meet with us. We spent some really good time together. They were very, very honest with us about what they wanted. And there was just no games being played whatsoever, which then felt like we could then lay our cards on the table. So everyone really laid their cards on the table. And we're like, and again, I'm a really big win-win guy, right? It's like, is this a win for you? Tell us what a win for you is. We'll tell you what a win for us is. And if that works, then that's good. And that is the way that I love to do deals together with people.
And what kind of questions did you guys, because you have two partners, what kind of questions did the three of you ask? And what were the answers that kind of made you most comfortable that, hey, maybe these guys are the best fit?
I think it was a matter of what does the future look like for our team, for us, for what are the types of opportunities that we're going to have. I mean, at the end of the day, like we love the idea of working with bigger and better brands. I think that's really fun for our team and seeing how do we continue in our organization to grow something that is going to be really impactful for brands out there. And that's one of the things that we really cared about. Right. And we didn't want to just be a little silo in a massive organization versus us. And then the other thing too is like, what is is there a capped upside? Or do we get to participate in something even bigger? Because for us to say no right now, right, or for us to continue growing, we have unlimited upside right now, right? And sometimes when you join a group, you're like, well, I'm going to take a little bit of chips off the table now instead of the unlimited upside. And this sort of met both of those criteria of like, hey, there's some pretty good upside for all of us here and for our team as well. That's a huge part of this as well. Is like, our team is around 75-ish now. Is like, it just continues to grow and grow and grow. And we wanted to make sure that we brought them along as well.
But also you bring them along, but you also bring growing pains along. Tripling is super hard to do. Tripling again off of that number or doubling off that number. Were there things that you were looking for in the group that acquired you that would make that growth path easier or more certainly successful?
Yeah, I mean, knowing that they had already done this multiple times was huge, right? So the other group had not, right? The other group, this was their first kick at it. And did I trust that they could do it? Absolutely. I really did. I did think that they could do the next bite and move on. This group had proven themselves time and time and time again. And so for us, it was less of a leap of faith to go with this group that had done it over and over again. And it also built up leadership teams, right? As you get into a certain stage, there's all this stuff again that you don't know. And so we were growing, we need to grow a leadership team, right? And we need to grow and have people that we look to mentor us in this, right? And we saw that in this group.
That's great. Interesting because of the dynamic. Oftentimes when people go to market, they solicit, indications of interest or letter of intent, and that starts to form out where the market is. You guys set expectations at what I think is a pretty high number, high value for the business. Open on structure, right? So that as you described, both sides could win. How did you guys arrive at that number?
I mean, we looked at a number that we thought, what would it take for us right now to give up some level of autonomy and partner with somebody else? And we're like, that's where we looked at that number and thought to ourselves, okay, well, here's where we're going to be in a year. And we have virtually no doubt that we're going to hit that number, if not more on our own. And so for us to partner with somebody, it's going to have to be at least this level for us to take something and take some chips off the table today, instead of in the future on our own
with a bigger number.
Yeah.
And so to be somewhat descriptive, you came up with that number. Group one gave an indication of interest at about 75-80% of that number.
Yeah.
Group two, kind of not messing around, came in at 100% to maybe 105% of that number.
Well, and not just that, they also gave us and are giving us the opportunity to hit an even higher number. And that to me was an immediate yes. That was like, okay, awesome. Whereas the other group had capped things and it seemed like it was going to be a bit more of a negotiation in that phase, whereas this group was like, hey, we're going to even give you a bigger carrot, right? And we're like, awesome. Thank you. Thank you. Thank you.
So now,
yes.
let me ask you this, because this part was interesting if you remember in the conversations. Then we immediately started to work on group 2. And the question got asked along the way, well, shouldn't we go back to group 1 and give them a chance to get up there? Tell me about your thoughts regarding that.
I mean, I was a little bit, I was fairly back and forth on this, right? Because I'm much more empathic than others, where I'm like, well, I want to make sure that they know what they're up against. So unfortunately, that other group never came back and said, hey, what's it going to take, right? We actually countered with our number, and they countered with just a more firm actual piece of paper and with their number originally. And so what that told us is like, okay, so you don't want to necessarily even have a conversation around what we want. And we understood, like, just so everyone has an idea, like, I won't say the numbers here, but there's no possible way we're doing this deal off of EBITDA. Like, it's not done off of that, which is why, of course, it's like, it's a hard one to get to as an investment committee, I'm sure.
Sure. And much of it is a moment in time where an investment in a group needs TikTok shop capability quickly, and social commerce is booming, and on from there. We also had the conversation, and maybe you can just comment on this, because there was concern that if these guys did come back to match what the second group did, would they really close at that number, or would they just be squeezing us all along the way to try to get back down to their number?
Yeah, so that's one big consideration. The other huge consideration that we had is that this other group, the group that we ended up signing an LOI with, has proven themselves time and time again in second bites, right? And for us, that was where there was it seemed like and feels like, and I know not technically, but there seems to be a very uncapped upside for us on the second bite. And they have proven this over and over again. You know, behind the scenes, we went and had a couple conversations with people that they have done deals with before, just to ask, you know, just like loosely, hey, what do you think? And these guys said, no, these guys are the real deal. All that they want is win-win, and they have been nothing but incredible the entire time. And so we saw that, and we thought to ourselves, okay, this is much more. We can definitely put our trust in these guys, because either way, on a second bite, you're going to have to put your trust in somebody, right? And we thought, these are the people that we want to bet on.
Excellent. So where we stand today, you've signed a letter of intent. You are about to go into what we hope will be 45 days, maybe 60 days of due diligence, quality of earning, legal, on and on and on. As we start to approach that, what are you most concerned about with due diligence and quality of earnings? And then what are you most excited about when we talk about post-close opportunities?
I mean, we're in an interesting situation, because even on quality of earnings right now, we're not nearly as concerned on any of that, because we have really situated ourselves in the way that we are selling the future, right? And we have put the deal in selling the future. Even if we look back at our trailing 12, it's just, this is a very different deal than previous people who have built up a business in that sort of way. And so I don't think I'm quite as concerned with that. The only thing that I'm concerned with is that it's going to hamper any amount of growth that we're able to have today. That somehow it is going to get in the way of our team executing on what we need to do right now, and us hiring more and bringing more deals in. And we are just like on an absolute insane trajectory right now. We have this crazy case study that just came out that was like with one of the biggest direct to consumer brands that's out there right now, which has just been a flood of massive 9 and 10 figure brands that are coming in and being like, oh, these guys actually know what they're doing. There's no competition right now for us. And so we need to take advantage of this time right now. And so that's the only thing that I am concerned with at all. What I'm looking forward to is working with their team, I don't even think I told you, I've already chatted with their CEO since the LOI on potential hires that they want to make together. And I said to our CEO, Parker, I said, oh, that's the start of due diligence. There you go. The answer is the start of due diligence. So you answered right. All right, let's go. So that's for us. It's funny. You said 45 or 60 days. I said, well, 45 or how about 30? Like, let's just do this fast so that we do not lose momentum this year, because this is such an insane year for brands trying to get onto this channel. And then obviously when you see Instagram, right, roll this out today, you know that this is the new way that people do business. And I've been talking about this for years, that this is how people will buy in the future, right? And now every brand has to do it. And so we're really excited on this side because we think we're going to be able to work with some of the biggest brands in the world, getting them onto the channel. And not just the TikTok channel, but all of the social commerce channels. We know YouTube is coming in very hard. We know Instagram obviously announced today. Like, that's what I'm looking forward to the most, is like really growing this into like the North Star of what a social commerce agency looks like.
That is a great share. Thank you. What we're going to do now is first of all, I'm going to thank our sponsor, which are the great people at Tower Partners. So thank you to our sponsor at Tower Partners, which is a great lower middle market investment bank in Maryland, voted by Axial as the #1 lower middle market investment bank in 2025. We're now going to fast forward to right at close time, Jordan, and we're going to do a retrospective on what it was like and see how enthusiastic you still are about the process and what that whole thing will be about.
Sounds great. Looking forward to it.
All right, Jordan, we have magically transformed a few weeks into the future so that we can get a kind of a mid-process update. So thank you again for comments and thoughts. You guys have really been growing exponentially over the past month and as far as you can see into the future. How are you allocating time and resources with what's required from due diligence, and so that you don't trip up on any of your growth or delivering to your customers?
Well, I think that it really helps at the stage and size that we're at, that we're not involved in service delivery, right? And on that side, I think that we've always thought about building to sell in the sort of way where there's no process internally that we are somehow in the loop on, right? Like we have an executive team that takes care of those. We're architecting, obviously. So I am president, chief visionary officer. I should come up with a better title than that, but and have a CEO, Parker, who is really running everything on the day to day. Now he is incredibly involved in due diligence, right? And that's great. I am also there from a higher level sort of standpoint during due diligence to make sure to be moving things around. But our team is like really working incredibly hard. I mean, I just saw again, I was looking and like saw that we grew again like 23% month over month. Like the team is doing everything that we can. Now, my thoughts during due diligence, like this is, I'm just throwing this out there, is what our job is that whatever comes up in due diligence, and not that I don't think that there is anything, like as far as I can tell, I'm like, like whatever is, it doesn't matter because they're seeing hit after hit after hit and win after win after win. I mean, how many times do I text you? It's like, hey, another $0 to $1 million case study. Hey, this, hey, that. If that stuff wasn't coming in, I'd be way more worried because then I'd be like, oh no. But like, I was at the dinner with the top agencies. I know who everyone else is. Like there's no one else. And so we just hit win after win after win. That's the big thing.
It is so true. We talked about this at the beginning. Rapid growth, consistent growth as you move forward will solve any of the problems of due diligence. And a lack of growth or a flattening out or heaven forbid a downtrend is going to draw a spotlight to any or all of those challenges and issues.
Yeah.
So
yeah. Sales solves everything, Todd. I mean, you and me, we're sales guys. We know that. Like, just sell more stuff,
Solves everything. Amen. You know what else solves a lot of stuff? Let's give a promo to the TikTok Shop Agency of the Year, which Commerce Club was. Talk about that. What was that like? Because you were just in Vegas, right?
So this actually happened in LA. So we went to the TikTok Shop Summit and we won multiple awards. So first was for one of our clients, Hey Dude, who won Breakthrough Seller of the Year, which is just massive, really, really big. That's going to get us a lot of business in that space. But then we were also top fashion agency in North America, which is huge. We immediately got an intro to Netflix, like an hour right after that. They just keep coming through. I talked to the head of TikTok Shop International, and he was just like, this is incredible. We don't have any agencies that we know of that are good at fashion. And so that's huge. And I said, well, awesome. I said, as soon as Nike, Lulu, and Viore start knocking down the door, I'm like, you know who to bring them to because we really feel so confident with them. And so that's just huge. It's really put the swagger in our team in a huge way.
Does it help you to know that that a much bigger level of support and infrastructure is on its way with this transaction that you're doing? Or do you think that you could talk about that?
Absolutely. So when I think about like the tech that we want to build next, right? Going into a team that has a CTO, for me, I have been every C title that you can think of in the role that I'm in. It's funny because I even look at whatever this new org chart is, and I'm like, I still don't. I just don't think I fit into an org chart. And so that's great. And I look and I'm like, oh my gosh, I'm going to have this resource and this resource and this resource to be able to build what we need to build. I mean, even today I was texting with one of our good buddies at TikTok. And I was like, tell me the tools that you want us to build so that you guys just have to give us business all the time. I'm like, we'll build you whatever tech is going to help you and your account managers internally at TikTok that they won't build for you because we can move fast. Like, just tell me what to build and we'll build it for you. And so,
I mean, that's great for TikTok. It's great for your customers. It's great for the group that's going to be acquiring you. That's a win for everybody involved.
Yeah, it's massive. So all of that is like having more resources is better as long as we use them and stay fast, right? That's the one thing, right? Like that's what I look at, and I'm like, okay, what's the speed going to be like? Because I really believe in competitive speed. Right. And that speed and sales solve a lot of problems.
We're probably about 30 days from transaction close. What do you expect in between now and then? More of the same? You think it gets bumpy? Do you have worries?
No, I mean, my biggest concern is why 30? Just like, all right, we just move so fast. I'm like, what's going to take 30 days from now? You know? So, I think that the big thing for us is continuing the momentum that we have internally and with our leadership team. And another 30 days is like, I mean, we're going to be that much bigger, right? Like it's wild to think what the last 30 days did. I mean, I even think like within that time have built, I don't even know how much tech within 30 days. And I'm like, another 30 days is, I don't know, it's a long ways. We're actually going to be out in person. I'm getting some more FaceTime with them, which is going to be interesting.
With the portfolio company.
Yeah.
I was just going to ask, have you been staying in touch with them pretty regular?
Yeah. So like we have had weekly calls with the CEO over there. Which has been great. Lots of back and forth texting, and like we've been pretty tight with them. Lots of planning. They've actually come to us for decisions that are going to impact us, and asking our opinion on those. And so that's been really, really great. It's really interesting. I mean, I have never been through a process of this size before, of this magnitude, and so I didn't know exactly what. I'm like, I'm just going to take their lead on this. And so chatting with the CEO often has been great. I'm not worried about this transaction closing. Like that's not part of like my worry at all.
Yeah. I think it's part of the hallmark of the private equity group that stands behind them, which is one of the best, that they always want to hit the ground running. And so the fact that you guys are getting to know each other and where you fit and on from there, I think will be valuable, so that closing day, the day after close, will just be like the days before close, and you guys can continue to progress from there. We will check in again in about 30 days when we're at close time, and maybe that smile on your face will be even larger if that's possible, Jordan. So thanks for kind of a mid-process update.
Absolutely.
Jordan West, man, we are here for the third part of your podcast, and we are officially post-close. So we can now announce that Social Commerce Club is a part of Padian, owned by Mountain Gate Capital. First of all, congratulations to you and the team and all the effort it took to make that work.
Yeah, thanks. It's going to be wild to listen to the previous two here and hear like, oh, how far we have come. Who knew the amount of things in between that it would take to get to this point? And we did it.
You sure did. You deserve congratulations for that. The whole team does. And it's the reason why I wanted to capture it in this format that we have. So let me start, if I can, to go back first, because you've done two, I think, really important things. Number one, a year ago, you decided to combine with Parker to create Social Commerce Club. Number one. Number two, you just decided this month to combine with Padian to create what that will become.
Yes.
What do you see, have you seen in social commerce that you think scale is going to matter more than being a unique independent agency?
Yeah, I mean, what we are seeing is the inbound that has come in. Like right now, as we're recording this, we have 10 contracts out. We cannot I guess we could. We could have at the level that we were at scale like this. What we see joining a bigger group like this is the amount, the speed at which we can get to scale, right? Like one of our core values internally is competitive speed, right? And I really understand that one of the things that I've understood over the years is that the faster that you can get to an outcome, it is an exponential on whatever you are doing. And so for us, we can get to that scale at a much faster rate than we could have on our own. And that's what's super exciting about this.
It's very interesting to me that you guys have all along had speed as a core value. Why is that?
Honestly, most of my core values have come from terrible business partners in the past. Like always. So like our core values are low ego, high agency, and competitive speed. I've worked with the worst of the worst when it comes to ego, not being able to learn. The same thing on high agency, right? It's everyone else's problem. And so these are things that I picked up over the years and all the different businesses that I've had, and highs and lows and all of that kind of stuff. And competitive speed was one of those. What I realized is that the faster that we could move, we could just beat people by just being faster, right? It's like the same thing in sales, like when there's an issue, when somebody calls in and wants you, right? Just pick up the phone and give them a call right away. And you can basically beat anyone, right? Most people think that people are going to wait. And it's like, no, we just want to be fast. And so we've been able to basically beat everyone just being fast.
And that might be part of the answer to this question, because you had options in terms of who you selected as your partner. You selected Padian.
Yeah.
What was it that you saw? What was it that was most important? Why did you pick Padian?
So there was a couple of different things that we were thinking about. So we were looking at what we could do on our own, right? So what kind of scale could we potentially get to? And we saw this massive hockey stick, right? And it's really hard to see what like an exponential curve looks like. And so we knew with this group that number one, we could get to that kind of scale really fast, and we could participate with them in that upside together, right? So instead of us getting cut off at the knees in sort of a classic acquisition, instead we get to be a part of this bigger group that is on quite a trajectory, and that we get to participate in that together. So that was something where it feels like there is no capped upside for us, and we're joining a bigger group with more resources together. And then honestly, another thing for me selfishly is the team that they have there is phenomenal and world-class. And I'm realizing that I now have a new lid that I can get to personally with their leaders, with their board, with all of the people that are there. I'm realizing that at the age that I'm at right now, this is an incredible learning opportunity. Also, on the same side, working with you, Todd, has really helped me in sales. Watching you, I always say to Parker, I'm like, it's like watching this master at the craft. And it's incredible. So that's really what it comes down to for me.
Thank you for the kind words. Dean is moving very fast, which I think you know and like, but they've actually added 2 or 3 other acquisitions within the last 2 or 3 months. Is that a concerning thing or an encouraging thing? Did it get you more excited or more conservative?
Well, I think we looked and saw that we agreed with the strategic plan that the Padian leadership has, right? And we understood the acquisitions that they were making. We are the only acquisition in what we do. And what they said to us is, we do not want to be number 3 or number 4. We want to be number 1. So we're going to get the top social commerce agency, and that's who we want. That at the end of the day is really, really important. And that meant a lot to us. And we are, again, with the speed thing, it's competitive speed. And us, we're incredibly competitive. We do not want to be number 2. We want to be number 1. And we thought that we really do believe that we can be at that with this team.
And so again, is sliding into my next question, because oftentimes you guys included, founders evaluate acquirers based on the economics of their offer. And a lot of times when I say economics, a lot of times people think, well, that's how much they paid me up front. But there's more nuance to that, right? There's cash, there's equity, there's earnout, there's all these other things. Tell me quickly about what stood out to you on the economics of their offer. And maybe more importantly, what about the non-financial factors that mattered most in the decision that you guys made?
Well, I really, at this stage in life, make long-term decisions, right? So what I'm looking at is, so yes, is there upside today? Absolutely. But what I'm looking at is long-term, right? I'm looking at these long-term relationships. I'm looking at long-term partners. All of that is really, really important to me. And so those were some of the non-financial things are the team again, right? Like being able to now be in different rooms that we could not get into before, right? There's something about that. And size along with speed is really important when it comes to that, because we can push our way into a lot of rooms and we can do that even more now.
How important is it in your mind, reputationally speaking, the non-financial things? Mountain Gate is super well known in the digital marketing space. Having done a transaction with them, and then probably what Padian will become in their future transaction, how much did that, I'll call it a resume builder, how much did that influence your thinking?
Oh, absolutely. When I'm looking at myself over the next 20 years and thinking what I want to accomplish, being able to be, again, like you are the amalgamation of the 5 people that you spend the most amount of time with. And I want to spend my time with those kind of people, right? I think that's what it comes down to is like, how do you get and stay in those kinds of rooms? This was the time, like some of the other people that we were looking at may not have been quite at that level, right? And we weren't in those kinds of rooms with them. And so seeing these guys and the seriousness at which they operate and the level at which they operate was the biggest thing for us.
I think you've gotten my last question. You got to peek into this. And I think if we do another episode a year from now, you'll have a real good view of this. But now that you're on kind of both sides of a deal, what would you say really separates agencies that attract, let's call it a premium valuation, from other agencies that kind of maybe struggle a little bit to get attention?
So my advice to founders in any circumstance is do the hard thing, right? Doing TikTok Shop at the time that we did it and being in the space that we're in is the hard thing. And so for agencies, it's not just differentiation, it's actually doing the hard things. So for us, that's like, I've taken a huge stand, and we'll see in a year whether this plays out or not, but I've taken a huge stand against AI creative. Lots of clients have asked us for AI creative, and I've said, no, I don't believe in it. I don't actually think that it honors the creators. It's way easier, but working with humans is the hard thing. Right. And so that to me, that's a bet that we're making. And I'm betting on humans over robots right now. And maybe I'm wrong. But if I'm wrong, then it's a world I don't really want to live in. So So I'm okay with that.
Did you get support from Padian on that position? Did you discuss that a lot with them?
I mean, this is something that we'll discuss, and I'll have the stance on. I've had hard conversations with huge clients of ours on why we think that this matters and why we think that this really honors creators, and that's who we really believe is going to be the people that are going to be pushing brands forward in the coming years. And so why not do things to help them out and take hard stands like that?
Great point. What are you most excited about? And if we're talking a year from now and you were looking back over the past year, what are 2 things you really want to have happen to feel like this was a great decision you made?
Well, I think that us growing within the organization itself, within the Padian organization, and being, when I look at this acquisition, I truly think that we will be the crown jewel in the Padian group. And that us as the Padian group will be the crown jewel of Mountain Gate. Like the kind of thing that they'll talk about at dinner parties, right? Of like, wow, putting this and this together. And we were so early on social commerce and deciding to go all in that we just did everything that we could to get the SEC group together. That to me is what I really love, to be first mover on this, and going all in on that.
Well, you're doing it at an exciting time with an exciting group. You've got great partners. You've got great support. It was exciting for us to play the role that we played. So thank you for agreeing to have this conversation as we went through the process. I will reach back to you in about a year. We'll see how the progress has continued. And I will wish you the best of luck going forward. Jordan, thank you.
Thank you, Todd. And for anyone listening to this, thinking about working with Todd and Tower, and like I cannot say enough good things about these guys. I am a great referral source for a lot of people, and I just this. We couldn't have done this on our own. I think that's really what it comes down to, is we couldn't have done this on our own. So
it's nice when everything. I'm glad you got that in, for sure. It's nice when everything comes together and works out so well. And thanks for the kind words. And we will wrap it with that. Okay, welcome for the 4th portion of this one episode. Parker Kump is with me, who is, in my perspective, Mr. Inside to Jordan's Mr. Outside at Social Commerce Club. So Parker, it's going to be great to get your perspective on how this transaction went. Thanks for joining.
Yeah, absolutely, Todd. Good to be here. Excited to, now that we're on the other side, break it all down. And
well, that's what I'm hoping for. So everybody comes into a transaction with expectations. It's going to, from things you've heard to things you've read and so on. So from your standpoint, what was different? What was it like? Just riff on that for a couple minutes, if you would, please.
Yeah. I mean, this was my first, this would be now my second transaction in 8-9 months. Like, we merged our companies, me and Jordan, but you've seen how me and Jordan operate. It's pretty back of the napkin, like handshake agreements. We just have like unlimited trust with each other. Going into an acquisition like this, obviously Mountain Gate had done this before, and the dollars and cents are a lot different. So the due diligence period was a lot different than what me and Jordan did our due diligence period. So I didn't have too much expectations. Luckily I have a lot of advisors and like mentors that have gone through it. And so they gave me quite a bit of warnings and tried to scare me, to say the least, that like, it's going to be a lot. And yeah, it was, it's not easy. We were saying this before we kind of jumped on this recording, like, it's like you have 2 jobs, especially we're in such early days. And a lot of this was fueled off the momentum and growth. So we couldn't slow down our growth. So we had to maintain substantial growth while getting through due diligence questions. And I mean, every day we probably had an hour to 2 hour call with either our partners or like legal team or the acquirer. So it was it was a lot going into this, but I think we did a couple things that made it a lot easier than what it would have been, which I'm glad we made those decisions.
One of them, from my perspective, and I want to hear what those couple things are. One of them is you divided and conquered. Like, you managed really all of the internal It's interesting because you on the beginning part of this episode, you'll hear Jordan talk about it. He's like, no, that's been easy. No, that's been easy. And he's just been doing everything that he needed to continue keeping sales up, which is so critical. And in fact, you guys outperformed during the due diligence period. So is that one of the things you would point to? And what else would you point to?
Yeah, exactly. That was it. I've talked to a couple founders where they didn't fill in their leadership team, or they just went through due diligence and tried to keep it under wraps until it was on the other side. I couldn't imagine doing that. So yeah, me and Jordan really divided and conquered. He is heavy on growth stage. So yeah, like the business doubled during due diligence, which is just insane. So he kept his head down doing that, as well as he would be involved in due diligence for the calls. But I was mainly behind the scenes, like prepping everything, getting like our COO involved, our HR. So we read in all our leaders. So that's like the one big decision that we made is because of the structure of the deal, everybody was incentivized on the tail end. So it's all good conversations. It's not a private equity firm coming in here and chopping heads, trimming the fat or anything. They structured it to incentivize our entire leadership team. So we read them all in from LOI, like pre-LOI. I think we were honestly at some points even too transparent with our team. Like we read them in from the early conversations to then LOI getting signed and then every step. So that helped a lot. Like I was just the point man organizing between, hey, HR has these questions. Okay, tax accountants that's involved in there. So we read in a lot of people. So we could just, if it was just me gathering all that data, we wouldn't have met the timeline. I think we were 2.5 months of due diligence. We wouldn't have met that timeline. We didn't have the whole leadership team. So that was one decision we made. And then Tower Partners was the other decision, is getting like a pre-work with you guys to set us up. Like I think we were supposed to do 4 months, but then it just caught speed so fast. We only got like 2.5 months with like Jeremy and Jacob and the team. But even that 2.5 months really set us up for like, okay, we got to get this stuff figured out. We have this stuff figured out.
So take just a second, because Jeremy will want me to do this. Take just a second to drill in there. During what Tower Partners calls their advisory process, what did they do there that was so helpful when you got to the time of doing a transaction?
Yeah, so clearly now on the tail end of due diligence, I have like this sick mindset of like, I kind of want to go through due diligence again because now I know what to expect. But like clearly you guys have gone through it many times. So it's like, it's just broken into categories. Okay, it's taxes, there's legal, there's HR, there's operations, there's finances. So you guys just went through like those categories of like, this is probably what they're going to ask. Do you have this organized? Do you not have this? And like, what's the story if you don't have it organized? So we got through, I think, HR, taxes, legal, operations. So we got through all those categories with you guys. We almost every week, it was like almost like a role playing exercise of like Jeremy and the team asking the questions that we then went through with Mountain Gate of like, do you have this? Do you not have this? Do you have this? Do you not have this? Oh, you don't? Okay, well, what's the story? Oh, hey, that doesn't look good. How can we speak to this and how are we going to fix that? And so you guys just kind of went through the exact categories of what they went through. So when the due diligence request did come, probably a good portion of the data we already collected because we were already collecting it for you guys. And there wasn't a surprise. It was like, okay, yeah, I knew they were going to go through the tax, legal, HR.
Yeah, it's so helpful to hear that. So many deals will break during due diligence. Some of them, not just because the numbers don't match up, but because the way in which information flows and the stop and start and all the other things are indicators that there might be something we got to dig deeper into. And so, as they say, slow is smooth and smooth is fast. I'm glad to hear that replicated as much as it did. Shifting gears just a bit. Oftentimes, so as you went through the process, you had a few offers for the business.
Yeah.
A lot of founders make decisions based on the economics, almost always just focused on price. But for you, there were non-financial factors that weighed in on the decision. Can you talk a little bit about that and why you made the eventual choice to be part of Padian and Mountain Gate?
Yeah, we kind of went into this with like a little bit of like a puffed chest and a mindset of, okay, we're not selling, we're actually buying. That's the kind of headspace that me and Jordan.
In terms of interviewing the groups you're talking to.
Yeah, like we didn't come in saying and like had a bit of like piss and vinegar in it of like, oh, we're not trying to sell because we need to. I said that to Jordan almost every week through due diligence of like, I can run this company for the next 10 years. Like we don't have to do this. Like if this ever turns bad and not and we said this like very early days with Mountain Gate and you guys, all we want is a win-win. Like, yes, we want to win, but also it has to make sense for you as the acquirer. You're going to write a decent check. It has to be a win-win for us. So if it ever starts feeling like a one-way win, we were fine with being. And so I think every business going into this process with that attitude of we're not selling out of desperation, we're actually buying the opportunity, that makes it a lot better. So when we had these other offers, as soon as it turned into not a win-win, we were like, cool, we're going to walk away from that one. We don't need that. And then Mountain Gate, we were very clear with. And then they even asked us pretty upfront. And I think our first call is like, what do you care about? Okay, obviously dollars and cents matter. Obviously a second bite or like tail end incentives because we're so early. Leadership team has to come with it. And then more importantly, you just have to, we're going to do this for the next 3 to 5 years. We have to like you guys. Like, we have to just really click well. And then we were like, great, 9 people are going to fly up to Vancouver and 2 weeks later, we had a great time. So like, we were really clear. We had that discussion before this is like, what is the win-win for us? What do we care about the most? And as soon as an X happens on those top 5 things, we just walk away from the deal. And so when we had these other parties, there was some pretty easy, like we had one party approach us and they couldn't provide any tail end rollover or equity. It's like, cool. Well, that's an easy no because we want to be incentivized on that side. And so it was, I think, having those discussions with your business partners before the process of being like, what is the hell yeses and what are the hell no's? And so whenever they came up with these other parties, it was a very respectful hell no. And we just shook hands and walked away. And there was just none of that with Mountain Gate and Padilla. And so we just kept going along the process.
Do you feel like when they came up, they got on a plane, they flew up, they met with you guys, everybody got together, both Mountain Gate and Podian, which is the company that they own. When they got on the plane and left, did you guys look at each other and say, those are our guys? Was it that clear or did it take more time after that?
Yeah, so we did. So the first day was a dinner and the second day was like a 6-hour call of just roasting each other with questions. After the dinner, we kind of looked at ourselves and said, these are our guys. Because honestly, we had all those questions. We knew the business and we kind of knew what they were trying to do going into this. The big thing that we were trying to grade is like, do we like these people? Like, do we want to work with them? Like, does culture align? And I think the dinner was calendared for 2.5 hours and it was a 4.5 hour dinner. And,
wow.
And we had a great time. And we left that dinner, like just being like, yeah, I can work with those people. So I think we put a big weight on the culture and how we feel. Like that's why me and Jordan merged. We just liked working with each other. We obviously saw the business opportunity, but that was kind of like the lagging factor. The leading was, do we want to partner up? Do we want to work together? And then we kind of had that same attitude going into this. So after the dinner, we kind of looked at it. It was like, I mean, unless tomorrow completely falls apart and like they say something that makes us run for the hills, we were pretty locked in after that dinner.
So Mountain Gate is the Mac Daddy in the digital marketing space. They're one of the top handful of private equity firms, really smart people, really thorough. What did you learn through due diligence? What did due diligence reveal to you about Social Commerce Club that may have surprised you? Or did it just confirm everything along the way?
Oh no, there was a ton of, it was like forced learning for me. Cause again, this is the most due diligence I've ever. So, there, especially being like an entrepreneur, there's things that you don't really put weight on that a private equity firm does, right? Like contracts, HR, like me and Jordan, sometimes we move at the speed of light. So there's like the busy like stuff that you're like, yeah, I don't know, just get that over the line. We'll make it work. But no, like every dotted line, every line in a contract matters when you work with a company like Mountain Gate, because they don't mess around like that. I think we had our accountant, he's done quite a few due diligence. He's like, this is like equivalent to like $100 million like acquisition. Like it was not a light due diligence period, which wasn't a negative thing. It actually excited me even more because then you could tell that they don't make decisions off of like gut feelings. They cross every T and dot every I. So I learned just that like a lot of the things that usually entrepreneurs don't put a lot of weight on, if you're building to sell, you should. Insurance, HR policies, like all the unsexy stuff about running a business, it matters so much going into due diligence. So I'm lucky that one, we worked with you guys because you guys shed light on before going into this that no, hey, those things do matter. So we got on to correct that before going into the process. And then luckily we were already before going into this process, when we merged, me and Jordan sat down and we're like, hey, we're building to sell this thing. And so when I took over as CEO, I put a lot of emphasis on the boring stuff. Okay, let's get a new HR person in. Let's repaper everybody so it's on a consistent contract. Let's get lawyers to vet the contracts. Like that's all stuff as like a year old company. Usually you kind of move at the speed of light and that falls to the back burner. But we had a head start at correcting all those things or even putting a lot of those things in place before this.
Yeah, when you look at the process, you can see that Mountain Gate and Podian is organizing a business that they will sell to that much larger buyer, and they're going to be ready for that years in advance. Two last questions. One, what capabilities do you have now at Social Commerce Club because of this transaction, and which ones are you most excited about?
Okay, yeah. I mean, I just had a meeting this week with them of like, when can we get some of these shared services? Because they just have so many capabilities that at a year and a half old company you haven't really built out, right? Like we don't have a full CFO and finance team. Like I had a meeting and like, cool, yeah, we can take that off your plate. Like they got AR, AP, like invoicing process, a CFO that will like put every financial model together that like at a year-old company, you probably don't have a CFO and a full financial team. We have an outsourced accounting team. That's great, but it's so immediately we're getting that. That's the first thing we're integrating. Same thing on the HR side. We have an HR lead. They have an HR team. Great. We can get a recruiter in here because we're hiring like crazy. So immediately we're getting shared services that one, we can focus on what we're really good at, which is executing for our clients, and they can take the back end office stuff like that. And they're a well-oiled machine. Like we've done all this before. Like, you got some AR aging problems. We know how to collect all that cash. We can do that. Let's just tag it.
Yeah. Also, I mean, yeah, and you're in a more competitive world now because of your growth and you're being on the map, which means you're competing for employees as well, which means when you go fast and you're small, we don't have all these benefits that the other guys have. I remember that was important to you, right?
Like one of the biggest things that I was really excited about. That's why like our first shared services that I asked outside of the finance department was the HR. Like we were a scrappy team, like building, trying to acquire talent, and as well being a Canadian company and a lot of our talent being in the States, there was just logistical issues like benefit. Immediately they're like, great, we have this amazing benefits program, like 401k, all this like stuff to go attract top talent and senior talent. Some of them love scrappy startups. Some of them, they got families. They're like, I just want a stable, great foundation of an organization that takes care of me. And a 500-person organization checks a lot of those boxes compared to a 100-person organization that's a rocket ship. There's risk there. And I don't blame anybody for not wanting to take that risk. So immediately we've seen our HR and recruiting process overnight improve because of we're able to offer this.
Immediately being in a week. Right? It's this thing got done 4 days ago.
We close on Friday. I just sent out 2 job offers this week with their benefits package included, and we're already getting better traction. So we're within even before 7 days in, we're taking advantage of it. So it's already showing, and I'm sure there's more aspects of the business that will unlock these, but that was the immediate one.
So let's end on this. A great transaction for you guys. So congratulations for that. For somebody listening that wants to do a transaction now, right, in the next couple months or over the next couple years, what advice would you give them?
I would say like one, start building to sell now and start just talking to like immediately you'll have a bunch of questions. Okay, well, what does building to sell mean? It is completely different than just building a business. Like you can build businesses to scale and you can build businesses to scale and sell. I would start talking to a professional. Obviously, I'd recommend Tower Partners. But it is a longer process than you think. And you don't want to, okay, now we're ready to sell. Let's get our ducks in a row now. It will time kills all deals. So due diligence won't be smooth. Probably something will break and it'll fall apart. it's a bit of a negative outlook on it, but like I couldn't imagine if we didn't have at least that 2.5 months working with you guys going into this. There might have been things that we didn't have that we wouldn't have known because we've just never done it before that could have scared Mountain Gate off or something like that. Put the deal at risk at least, right? So I would say give yourself at least a 4 to 6 month runway before you're ready to go to market of building to sell and getting ducks in a row.
And to paint the right picture, that was the plan, right? We were going to get everything organized, beautiful package, the whole thing. And we were going to do that over 4 months, and everybody was on board for that. And as we do at Tower, we've got a group doing that, and we've got another group, myself leading that, talking to the market and starting to look for opportunities. And the one opportunity with Mountain Gate came, and they said, "Listen, we want to be in business with these guys." And so we moved a little bit more quickly, but having those 2 or 3 months of advance. My goodness, I mean, think about it. If we didn't have that, where would we be? We'd be all over the place.
Yeah, it would just make due diligence a lot harder. And Jeremy was really clear on this. Like when you're before LOI, you're at your speed. Post LOI, you're at the market speed, right? So if they're saying, "Hey, give us your HR policy," and you're like, "Yeah, I'll get that to you in 3 weeks," that probably sends a pretty like a big question mark of a signal, right? Where if it's like a 24-hour turnaround, here's our HR policy. Okay, they got their buttons in a row. And it's clear with due diligence, it's all about just green lights, right? As they go through the process, it's green lights. As soon as they get a yellow light, they dive into it. So your goal is to just give them green lights across all those different categories, and then you'll have a smooth process. Whereas that example I just used, it takes you 3 weeks to get an HR policy over to them. That's probably a pretty big yellow light that they'll be asking more questions on HR policies after that.
Very true. That's great insight. So happy that you guys got such a great transaction done. I said the same thing with Jordan. We're going to come back in a year or so for an update, but congratulations and thanks for making time. I know you're super busy now, Parker. Thanks for making time to share your insights.
Appreciate it, Todd. Thank you guys. This was awesome and definitely a success.
Thanks for listening to the Second Bite podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.